But let's focus on earnings. That really is going to propel stocks further. Amit N. Mahajan, director at Paris Defense, joins in on the show right now to talk about how their quarter was. Amit, hi, great to have you in ET now. Thank you so much for taking the time out. Help us understand, while the top line has shown good growth, there's been a significant decline in your profitability. What explains that?
Good afternoon. Firstly, thank you for having me over. And it's always a pleasure to talk to ET now. The revenues have also grown, but not too as much as we would have expected. What has happened this time, there are two, again, I would want to mention here that there are two positive factors because of which the profitability has gone down. And let me try and explain. One is if you see defense engineering has done better than better than optics and optronic systems. Now, if you come to my company, the defense engineering team will really rejoice because they have outperformed themselves. What happens to business is because that's a competitive zone, the profitability is a little lower in the defense engineering side. So although they are happy on the net profit, when you see on the company level, you see a slight dip. Second is why I say that positive is because this gives the optics team a lot of competitive field for them to perform. There was a particular product which was to get delivered in the Q4. Now it will come in Q1 this year. This one particular shift has just taken that much revenue off and also profitability. The another positive part is if you see the employee, the expenses that we have on the employees has gone up by 30%. Now, which means we have recruited some real nice talent in the company, and you will see the effect of this on the days to come. So I would consider all of these effects as positive effects looking forward, rather than looking at a slight dip here and there is fine.
But would you, stand by with your guidance of 20 to 30% for FY25 and 26 when it comes to your top line?
Absolutely.
Okay.
But don't you think you're being a bit too conservative there because the growth rates have been much higher for you? 20-30% seems to be a bit conservative given the order book is also quite strong at 630 crores.
I agree with you. Last 2 years have not been as per our projections. So it is always better to be conservative. We are trying to learn how to be conservative and outperform. We have not done that as yet, but the intent, all the blocks are in the right place. We just have to remove the dependency on external forces like testing agencies and all of that. We need to mitigate those. We need to understand how to overcome those barriers, which we will in this financial year. Whatever 20 to 30%, I agree with you, is conservative. There is a strong order book. And as we speak, the L1 and orders which are slated to come to us, if we add that, it's far and beyond 630. So we are in a good position when it comes to the business. It's just about, getting it on the paper.
Okay, point taken on that one. But what about the margins? Because your margins have also come off quite substantially. I mean, I remember them seeing above 30% come FY21, and now they're down to what, 15% thereabouts? Halved, really?
No, so we are looking at PAT margins at 15%, and we're looking at EBITDA at 30%. So what has gone there is the defense engineering factor, which I told you. Defense engineering has gone to 73% from a 40% amount. So you can imagine that is going to have some impact on our profitability. Said that, a big product of our optics and optronic systems has gone to this Q1, which had all the profitability built into it. That would have set the percentages also right and also the profitability, but it does not hamper the prospects or the business at all.
Conscious shift that you're looking to make within your revenue segment?
So if you see legacy last 2 years, our optics and optronic systems have always been around 50 or more when it comes to contribution to the complete company's revenue. What we as a company would want that optics and optronic systems always continue to do that higher than 50%. This year, because of the reasons that I told you, it could not, but next year it will cross 50%. What also comes in as an effect in this year is also the expenditure we are doing on the subsidiaries. Currently, they are not doing revenues. Now, when I'm talking about revenues, I'm talking about anti-drone subsidy in specific. We are putting a lot of R&D effort there. We are building some real nice products which will start yielding revenues in this financial year itself, and that will start compensating, one, eliminating the loss effect on the balance sheet. At the same time, it will build newer prospects for the whole group. So coming year, you will see the effect of anti-drone also sharing the revenue pie.
Amit, on that note, we let you go. Thanks so much for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.